Hello, everyone, and welcome to today's event titled Demystifying Cryptocurrencies, organized by the LSE Alumni Association of Mumbai and Western India. My name is Sharan Agarwal, and I am the Students and Recent Graduates Coordinator at the Mumbai chapter, in addition to being an angel investor and the founder of a wellness brand named Leviosa. I'm joined today by the committee members Amrita Bhatia Babbar, Ankit Modi, and Sona Mosquita. Before proceeding, I would like to give each of them a moment to introduce themselves.
Hi, everyone. Hi, everyone. I'm Amrita Bhatia Babbar, and I'm the chairperson of the LSE Alumni Mumbai Association. I work in my family business, which is an export firm, and I'm the finance director there. Ankit, do you want to?
Hi, everyone. I'm Ankit Modi. I'm the events coordinator, and I graduated from LSE a very long time ago in 2005 with a degree in government. I work in the energy business. I have a family business where I supply products for energy projects. Sonia?
Hi, I'm Sonia Mosquita. I'm the communications coordinator for the LSE Alumni Association Mumbai, and I'm also the founder of Studio Jigsaw, which is a brand strategy and innovation consultancy. So I'm looking forward to today's session.
Thanks, guys. So I would now like to introduce today's event and our speakers. Cryptocurrencies are actively being discussed on news. There are various posts and memes about them on social media, WhatsApp groups dedicated solely to discussing them. And even so, they are misunderstood and people do not understand the underlying technology or use cases. Joining us today are two prominent experts to help us demystify the crypto space, Ajeet Khurana and Abhinav Munshi. Ajeet Khurana is a globally famous crypto evangelist and is not only the chief evangelist at FOHO, but also has been an advisor on several Web3 projects. He was the head of the Internet and Mobile Association of India and is the former CEO of Zebpay. He's also an author, speaker, advisor, and an angel investor. Abhinav Munshi is the managing partner at Razor Ventures. He has a strong track record in sourcing, executing, and managing VC and PE funds. He currently manages a Dubai-based family office and is going to launch his own crypto fund very soon. The flow of today's event will be an introduction by both Ajeet and Abhinav about themselves and what cryptos mean to them, followed by four broad and most fundamental topics that we felt needed to be explained based on their relevance. To begin with, there will be a conversation on decentralized ledger technology, or DLT, and Web3, as this is the foundation for cryptocurrencies and other applications such as NFTs. We will hear about cryptocurrencies and their applications, and then Ajeet will walk us through the regulatory aspects of cryptocurrencies in India, as that is something that is a topic of great uncertainty at the moment, and he has worked closely with the Supreme Court. The last topic will be an introduction to NFTs, or non-fungible tokens, which Abhinav will talk about. Finally, we will open the floor to questions for Ajeet and Abhinav. We request you to make use of Slido to post your questions. Please visit slido.com, that is slido.com, and enter the meeting code 312674. So I repeat, that's 312674. The same has been posted in the Zoom chat box. You can then post your questions and even upvote other people's questions that you like. So I please recommend that you upvote other people's questions so that we can get as many of the most popular questions answered. We will pin the most popular questions to the top and we will display them to the speakers to answer during the Q&A. So on that note, let's begin. Over to you all, Ajeet and Abhinav.
Hey gang, very nice to be here. And in preparation for this event, Sharan had told me that the most popular event was where Karan Johar came and he gave me a number of people who attended that. I think it was 160 attendees as opposed to signups. I can see that we are at 137. So if you think that I am better looking than Karan Johar, please call 23 more friends so that we can beat Karan Johar's session. But with that introduction, let's start talking about crypto with the a discussion around decentralization, Web3, and where all of this is going. So here's what's happening. You must have heard of Web 1 being non-interactive, Web 2 getting interactive and more functional at the user base, and Web 3 probably being more decentralized in its ownership. These are all statements of intent, which means they can happen, as opposed to Web 1 being decentralized, very, very difficult. There were no instruments or technologies available, but they have happened only to a minimal extent. So you will see Jack Dorsey and Mark Andreessen, sparring online about why, whether Web3 is real or if it is a fad. Both of them are right in their own way, because one of them is talking about what can be, and the other one is talking about what is. The reason this entire thing has actually gained so much momentum, and while if you were to wake up today after like a 10-year sleep, you might get the impression that this is all hype, this is all a fad, this is unreal. It is usually good to see the history of it, because we are now year 13 of crypto. So if it is some sort of a hype or fad, etc., it's lasted a very long time. The promise of this entire Web3 space is decentralization of what? Of basically everything. For example, today, if you are using an Uber or an Ola to hail a cab, today, if you are using Paytm, MobiKwik, HDFC Bank, etc., to send money, it is very different than how you would hail a cab by actually standing on the road and waving your hand, or maybe calling Meru and saying, please send me a cab at this location, where there was a lot of interaction with the corporation that sent the cab, or you would go to a bank branch to send the money. Most of those functions have been programmatically executed. Most of us will not know where the Uber or Ola office is, much less having had a phone call with them. If we have reached such a big journey already, why not take it one more step further and remove the Uber, the Ola, the HDFC Bank, the Paytm from the picture entirely, and let a program run the whole thing? This would be an example of a DAO, or it would be an example of DeFi. DAO being a decentralized autonomous organization, or DeFi, which is decentralized finance. The logic here being that why does this one central company like Uber have to decide what the fares will be, who gets how much, what the surge will be? Why can't it be truly democratized and owned by the masses? There are going to be logistical issues as well as regulatory issues that come up. Regulatory issues could be around, who bears the liability when something goes wrong. Now, today, I can sue the bank or the company. Do I sue the program? Do I sue the node validator, the miner? Who do I sue? Do the foundation? So there are challenges, there's no doubt, but we stand at the threshold of what could be a golden future where we can truly experience democratization. So I'm 51 years old, and I have seen like at least 10 significant developments or innovations in my life. I think the availability of the consumer internet, which we are all using, mobile devices, internet access in general, e-commerce in specific, net banking, money getting digital, and just social media. I could just keep going on. And barring artificial intelligence, where I haven't yet made up my mind, and it could be an exception to what I'm about to say, all the other innovations that I listed were all democratizing in nature. It wasn't as if you had to be really rich to have a phone connection in the house, as was the case when I was very young. It isn't as if you have to be like a Doordarshan or a Zee News to be able to propagate news. Social media can do that. So we are anyway moving. The trend is towards disintermediation and, let us say, devolving power to the people. Now, Web3 can take it to its ultimate goal of just removing the central authority. Now, the interesting thing is that who is going to have to help this? It is crazy, but it is the central authority who is going to have to help this. So if we are talking about disintermediating a central banker, if we are talking about reducing the power of the government and increasing the power of the people, the central banker could say, I don't like that. So RBI says blockchain ban. The central government or the government of nations would say, this reduces my power or oversight, so I stop it. So what we are noticing is a chaotic situation where, to remove the central authority, we need the central authority, the present central authority, to be indulgent. This is not going to happen very easily. Luckily for us, some nations around the world have been more receptive to this than some others. And as a result, this is not something that died down, while so many attempts were made to shut this down or to brush this aside, etc. The future of it is very interesting. And I think that if this entire paradigm had to go south, as in just not work, it would require not just a government, but a concerted effort by several governments to say that we are going to treat it as if, it's like the narcotics trade or something equivalent of that, and they're going to really clamp down. Theoretically, in that situation, governments can not just come up with legislation which opposes this, but also start using their computational power, their own supercomputers, to actually break these networks. Barring that, as far as the wild west pricing that we are noticing, I cannot deny the fact that a lot of what you see is irrational in the market. And that is going to be the case, right? When there is what is the equivalent of a hype cycle, social media, e-commerce, everything went through its own hype cycle. When there's going to be a hype cycle, there's going to be a lot of noise along with the signal, and we are experiencing that. A lot of people who wish they had invested in Bitcoin when it was at 100th the price, today may still invest in Bitcoin, or they may look for the next Bitcoin, right? And when they look for the next Bitcoin, quite likely they are buying garbage, right? Because gold is like 70 lakh rupees a kg. So might as well buy plastic because that's 1,000 rupees a kg. It might be the next gold. So that sort of reasoning does not always pan out. It rarely does. With that, I'm just going to hand this over to Abhinav, because I'm very keen to start answering questions. And although Sharan has said it already, the Slido that we are using, we are going to end up only answering the top, let us say 20 to 30% of the questions. So instead of typing in new questions, if you could just upvote existing questions, we will make sure that the most popular questions are answered. Thank you very much for having me here, guys. I look forward to replying to some of your questions, and maybe even after this session, engaging with some of you. Thanks.
Thanks, Ajeet, and thanks for laying the groundwork so well. I'd like to maybe give a little bit of my background and really journey into crypto, because I think that sort of informs my perspective and how I see the space and how I see value in this space and of this technology. So everyone has their own path. My path is, I come from 20 years of what crypto natives would call TradFi, traditional finance. Which is essentially, private equity, venture capital, Web 2 venture capital in emerging markets. And in the case of venture capital, also the US and India key focuses for me. For me, my crypto journey started really in earnest in 2019. At the time I was studying sort of the macro environment. It was clear to me that something very unusual was happening in the macro space and in markets post the financial crisis. And there's a lot of great work on this. Famously, Ray Dalio has written an excellent book on the history of long-term debt cycles. And basically, I sort of went down the rabbit hole on macro. And very long story short, it was clear to me that we were at the end or very close to the end of a 100-year debt cycle, right? And a 100-year economic cycle. And typically, these coincide with political and social cycles as well, right? And the key conclusion was, the cycle has started in 1940 after the Great Depression and World War II, had come full cycle going from 0% interest rates and highly over-levered economies at that time to a massive deleveraging cycle through the crisis and the war, and further from there, lots of currency devaluations against gold. And we had gone back up to, massive levels of leverage, etc., over the last 80 years. The only solution really out of this scenario, again, very succinctly, is a huge amount of deleveraging, right? Reduction of debt versus nominal GDP. And the only way to do that in the nicest way was to go through a sustained period of high inflation and to go through a sustained period of currency debasement. The other ways, which are basically you either default on your debt or you basically do austerity. And think in the case of austerity, the pre-Nazi Germany, that didn't lead to very good things. And in the case of default on debt, Argentina, and that doesn't lead to very good things. So really the only option the global financial institution has is to delever through inflation and through currency devaluation. And so if you come to that conclusion, then you move very quickly to, okay, what do you invest in as an investor in that scenario, right? And in the traditional world, you would have gone to things like gold and hard assets. I think I sort of pulled a little bit further on that string, and gold led me to the digital gold, right? In the current world, in the digital world, Bitcoin use case as a digital gold just made a lot of sense, right? And then of course, coming to Bitcoin, you go very quickly into blockchains. And really for me, I sort of went down the rabbit hole pretty deep. And the key insight out of all of that was that somehow through this blockchain technology and through Bitcoin initially, and then later on other applications of it, what we managed to solve for initially is the ability to generate consensus, right? The ability to get a large number of unrelated parties to agree on a common truth. That's what essentially Bitcoin is, right? Everyone agrees that the current state of the ledger is the right state of the ledger. And that's done through a relatively complex consensus mechanism. And this consensus mechanism was a very clever combination of crypto technology, but more than that, it's about incentives, and it's about designing, how people behave and how they are incentivized, and that. And so this solution is really where my sort of eyes open to the general application of blockchain, right? And my view at that time, and therefore I went in, very deep personally in terms of investing, and I think there are lots of applications, and Ajeet has talked a lot about some of these applications. But for me, that was the core. The ability to get a large group of unrelated people to agree on something is an extremely powerful force, right? And that's really what makes blockchain special. I want to maybe spend a little bit of time just, defining what I see as what a blockchain is, or what are the key attributes of a blockchain, right? So in my mind, a blockchain is simply a database that has three key attributes, right? It is immutable. It's an immutable historical record. That means both the data as well as the sequence in which the data has been accumulated in this database is something that you can't change, or you can change through a very rigorous consensus mechanism. You need to get everybody to agree to that, right? So that's number one. Number two, that it is distributed or decentralized, as people say. And that is not just on how the data is stored, but also how people come to agree on that data, right? And number three, very important thing about blockchain and why it's so useful is that it's open, it's public, and it's permissionless, which means everyone can look at it, anyone can verify the data on it, and anyone can use it if they choose to participate. Set up a node, any one of us can do that within a few hours, and we are part of the system, right? So these are the three things I think that are fundamentally important about blockchain and why they're useful. I think just touching a little bit also on Web3, a lot of controversy on the terminology, but essentially for me, Web3 is this idea that the internet, or is an idea of the internet. And I think I completely agree with Ajeet that it is aspirational and it is not yet necessarily completely realized or even mostly realized. But the aspiration is that the new internet, the new version of the internet will be primarily, it'll be decentralized, and that it will be, it will allow for ownership. So, if you think of Web 2 as something that is a read-only, i.e., from a user, I'm mostly consuming information and data digitally. So that's Web 1. And then if you think of Web 2 is where, as a user, I'm a consumer, but I'm also a creator, and I can generate data, right? But Web 3 is about being a user, being a consumer, being a creator, but then also being an owner, right? And that's really, really important differentiation. I think the ability to own, the ability to be part of the governance system is, I think, what will set Web 3 apart, or aspirationally set Web 3 apart from Web 2. So, we can talk a little bit about use cases and so on, Sharon, but let me just stop there and see how you want to take this forward.
So that was amazing, guys. Thank you so much. You've covered a lot about Web3 and what DLT, about what blockchain is. You've sort of even touched upon what DLT, which is decentralized ledger technology, is. But if you or Ajeet could, shed some more light on what the exact meaning of it is, if you have to break it down for a beginner, how would you explain what a ledger is, and what this peer-to-peer technology actually is, before we actually understand what cryptocurrencies themselves are?
So Abhinav, I welcome you to respond to this, but I'll just say it in very, very quick. Abhinav, actually, why did not label it? Actually, Sharon, Abhinav did respond to it when he talked about consensus. So if you had a central system, like let's say the Aadhaar database, now because we want it to be secure, we will probably have multiple copies of it everywhere. This does not create a distributed ledger. It just creates a distributed architecture of the database. What the Bitcoin blockchain did, and now specifically I mean Bitcoin, is that it allowed for a large number of participants, let's call them nodes for no specific reason, to develop a consensus among themselves in a distributed fashion where there was no guru. Like, for example, if RBI is the guru and then there are commercial banks, so let all commercial banks get together and have a decision. But they are doing it under the blessings of the RBI, otherwise they would never reach a consensus. For example, some of this happens with the SWIFT network globally, whenever a change has to be brought about for international remittances. So distributed consensus requires every participant to have control of the database themselves, right? So that is where the ledger or account or database, don't get hung up on them, all three mean the same for the purpose of this discussion. It is distributed to everybody who wants to hold a copy and everybody who wants to propose a change in it. So for example, I could have the entire Bitcoin ledger. It would take me like a few GB to download. And I could go to my wallet address, which could loosely be called my account, and say, you know what, I think I have 1,000 Bitcoin, and I go and change the database that I have 1,000. Yeah, so my copy of the Bitcoin database or ledger will show that this wallet address belongs to me 1,000, but nobody else is going to believe it because there's a consensus mechanism built into the blockchain where a large number of people are talking on the blockchain at the same time. This is so amazing because I don't know who else is on the chain. I don't know how many more people are on the chain. So for example, today you ask me how many miners are there or how many people are running nodes. There is no way to know that in a technical way. You may know that commercially by conducting surveys or polls, etc., which is a separate story. But the fact is that there is a certain number of generals who have surrounded a city. These generals can no longer talk to each other. And now they are facing the enemy, which is in the city. And they run the risk that the other generals might turn around and run away, that is withdraw, while they may try to fight and they may be killed. At the same time, the reverse may happen. This is mathematically, classically called the Byzantine generals problem, which until the Bitcoin algorithm had been created 13 years ago, was considered to be one of mathematics' unsolvable problem. In creating the blockchain network and architecture, which Satoshi Nakamoto created, actually this mathematical problem got one solution, and that is what is happening here, using the mechanism called a distributed ledger. Distributed ledger is just a technology. Blockchain is not distributed ledger or the other way around, though just like your coin and token question, people often use both of these because they're closely related.
Got it. Thank you so much. Because actually, from my understanding, blockchain is actually one smaller set of the DLT, right? It's an application of DLT, but it's not interchangeably used.
So I like to view this as the traditional Venn diagram. As in, it's not as one is the subset of the other. It's not as a DLT, the big circle and blockchain is inside. Actually, there are elements that blockchain can do without a DLT, but it needs a DLT. And there are other applications than blockchain and DLT. So it's like an overlapping set.
Understood. And you mentioned about coins and tokens. Just taking that forward, what is the difference?
So many people will use these two terms interchangeably, and I must confess, I'm one of them. Because frankly, what happens is that, while we could say that coins are coins such as Bitcoin, Ethereum, etc., which have their own blockchains, and hence these are coins that power their own blockchains. There are many other names that could be Polygon, Cardano, Solana. But tokens are tokens that are created on existing blockchains. But I personally believe that while it's good to satisfy the curiosity this way, but it doesn't serve as, frankly, for example, if I started saying coin when I meant token or token when I meant coin, there would be really no difference in conclusions that I would reach. But yeah, that's the fundamental difference.
Understood. So, since you all mentioned about the technology that, you said that the, Solana, Ethereum, Bitcoin all have their own underlying blockchains. For our audience, could you just elaborate on this aspect, that what exactly is a cryptocurrency, how is it created, and the fact that each crypto is it's misunderstood, right? People just invest in cryptos without understanding that there is a meaning to it. So what purpose does each crypto serve? Like, it's not understood by people that each crypto is actually created to serve a particular purpose. Could you share some light on that? What white papers are, the use cases for trading?
Sharan, when I turned 13, which was a few years ago, I started asking myself questions as to what is the purpose of my life. So it is only fitting that on the 13th birth anniversary of Bitcoin, you also have started asking for purpose. But I have a request for you that I'm noticing that almost all of your questions, maybe all, can be answered eloquently by me as well as Abhinav. So I'm going to need you to point to someone. Otherwise, I run the risk of, hogging up Abhinav's time, which would be very, very unfair.
So Abhinav.
Why don't I just take an initial crack at it and then Ajeet can add on, right? Look, I think cryptocurrency is such a confusing term. But anyway, look, let's take Bitcoin as an example, right? So Bitcoin has a blockchain, but it's more than just the data, right, on the blockchain. It's a network. It's a network of miners. It's a network of people who run nodes. It's a network of all the wallets who hold Bitcoin, right? And all these people sort of interact on that blockchain. So Bitcoin is what you call a layer 1, which means it's a standalone independent blockchain network with all the entire fully fledged ecosystem around it, right? Now, Bitcoin's primary use case and its primary design, its design features primarily lend to, at least as of today, they lend to, at least in my opinion, a sort of largely a sort of aspiring store of value type asset, right? It's relatively simple. They've tried to not complicate the capabilities of the programming, capabilities on Bitcoin, etc. Right? And it's a very conservative system. It totally prioritizes decentralization, but the decentralization is not just one thing, right? It's a spectrum. It's a spectrum between, let's say today, Bitcoin is probably the most decentralized chain out there, to completely privately held chain. Let's say Facebook would create a blockchain that was completely controlled by them, right? So that's that network, that ecosystem. That's what a blockchain L1 is. Similarly, there are others. So, for example, Etherium comes out, right? And Ethereum's use case was when they first started. They said, "Look, we're a world computer. So we are this chain that, yes, of course, we have a coin, but that coin, it's more about a utility. We allow people to build, certain programmability on top of our chain. So it was optimized, I guess, for having a more sophisticated programming language on top of it and allowing for smart contracts, right? And therefore, because of that, it had different use cases. DeFi starts off on the Ethereum network because Ether allows a lot more flexibility in terms of how much you can program on top of it. Then you have, certain things arise, like as the system evolves, usage increases, gas fees become really expensive because, a lot of people start using the Ethereum network and the price of Ether goes up and gas fees goes up. And it starts creating a lot of friction, right? Because of that friction, people are saying, look, I can't use Ether anymore for the use cases that I want, let's say for high velocity, high throughput financial usage, because there's high variability in cost, right? So certain other people step in and say, oh, I've got a brand new layer 1, like Solana, for example, right? That steps in and says, look, I can do high throughput, I can do it at a very low cost. So, I'm probably better suited for DeFi applications. Now, all of this is a very early ecosystem that is just emerging. I mean, we're right at day 0, right, on this. So what's clear is that people will try and potentially capture specialized use cases as and when things move on. But what is not clear is whether we have a one chain to rule them all world in the end. And I don't personally believe in that sort of scenario. Or do we have a multi-chain world? And some people seem to think, like we asked Chris Dixon from A16Z, he'll say, in the end, it's going to be a 7-chain world. Why 7? I don't know. But basically what he's saying is that there'll be a small number of L1 chains and then everything else builds on top of it, right? So we're in the very early phase of that very, very rapid evolution in this space. And I'll be completely honest, I don't think I know what's going to happen. I'll be surprised if anyone else tells you that they know what's going to happen. But, we're just sort of all watching as this evolves. I don't know, Ajeet, if you want to add something to that.
I'm good. We'll move to further questions.
Right. So just before we move ahead, I just wanted to, circle back to something that you said, Ajeet, which was about Swift. And I wanted to ask you about how the entire global network is shifting from Swift to blockchain. Like, what is your take?
So the thing is that if you consider all the banking participants who allow money transfer, and I use banking very loosely to include Visa and PayPal and all of these guys, as if they have banking license of some nature or the other. Fundamentally, the two fuels that these people use are, one, is regulatory fuel, which means they are licensed to do so, they are recognized to do so, they're authorized, etc. That is the regulatory fuel. And the second thing is the technology fuel. The technology fuel comes from the fact that they set up elaborate hardware, software, they have people, they run the show, they have their own cloud architecture, etc. Now, what has happened in the crypto world for money transfer, because that is what your question was, is that the crypto world says, you know what, my regulation is my program. So the two fuels that they needed, one was regulatory fuel. So they say, no, my regulatory fuel is my computer program, my algorithm. So they get over a lot of the hassles and of course create new problems on the way, where effectively you and everybody becomes a banker or central banker, depending on what role you want to play. And the second thing is around the hardware, software, and IT utilization. This is where the innovation is still more remarkable. It is remarkable because while the hardware and electricity and time requirements to run these transactions on a blockchain are probably much greater than what commercial banks have to use at this stage. Because they're all distributed, the distributed ledger that we talked about. But the fact is that the cost is not being borne by the entity. It's just like, imagine if HDFC Bank wanted to send money to Bank of New York, and neither of them needed to have hardware for this, or computer setup for this, and there were third parties who were running computers. Something like that is happening, and these third parties are referred to as miners, authenticators, validators, delegators. There are various names depending on where you are in the food chain. So these third parties then are bearing the cost. But now, what do you give these third parties for bringing in so much effort, time, money, resources, electricity, hardware, and supervision? What do you give them in return? Can you pay them a fee? No, because that will be very inefficient. So you create a reward structure, and the reward here is a token. You could call it a coin if you like. The token fundamentally achieves two purposes. It creates governance. Governance means that everybody who is actually in a position to try to hack the system or perform a bad action will actually be hurt the most if they perform the bad action. So that is how the governance comes in. Governance also comes in deciding the future of how these things evolve. And the incentive system, so governance and incentive because everybody who is mining Bitcoin, Ethereum, or what have you is hoping that they will be the one to crack the next block and get a bunch of Bitcoin, which will, really one time you do that, you earn like a few years worth of income, right? Depending on, of course, your economic status. And I think that is what creates an incentive to continue using this. This is where, on the one hand, there is a regulation-driven, capital asset-driven system, which is the traditional banking. And then there is the algorithm-driven and distributed participation-driven identical system, which transmits value from point A to point B. This is the challenge. And I personally think that we already are at a point where hundreds of billions of dollars are being transacted every day on the various blockchains. And hence, while it may not really be a match for the old banking system, but it is not something that can be thought of as a fringe activity to not be given attention to.
Thanks, Ajeet. Just before we continue to what regulations are in place and about NFTs, I just want to remind the audience that in case you have any questions, please post them on slido.com with the meeting ID 312674. We've already mentioned it in the Zoom chat. So, and upvote other people's questions, because if you like a question, then that will become more popular and we will ask those questions to Ajeet and Abhinav at the end during the Q&A. That being said, I want to move on to the topic of regulations, and I'd like it if Ajeet could address this, because you have been working with the Supreme Court of India very closely, as you told me recently. So there's a lot of uncertainty, a lot of questions regarding this, about taxation, about wallets, about can you have a wallet in India and abroad? How do you move the money around? How is it taxed? So could you just shed some light about regulations in India?
So that I don't accidentally, what is that term you use when you do something against the court? As in privilege or whatever the hell. So no, I don't work with the Supreme Court. I don't know, maybe the judges, chief justices, or whoever they get. I I have three backgrounds in this space. One, I used to head at one point of time the Blockchain and Cryptocurrency Committee, which has now changed its name to Blockchain and Crypto Assets Council, but it is the same thing. I used to be the head of that and would represent all the exchanges. Second is that the RBI effectively banned the crypto exchanges by not giving them bank accounts. When the action had to be taken at Supreme Court against the RBI, which we eventually won, for the first few months of that action, I was driving the action from our side. Then I was relocated abroad, and then some other people took over. And third, with the Department of Economic Affairs under the Secretary Subhash Garg, who authored the bill supposedly criminalizing Bitcoin in India in February of 19. So under two finance ministers, Arun Jaitley and then Piyush Goyal, I have visited there, worked with them, done public hearings and stuff. So the state of regulation is very clear. Globally, other than few countries who still refuse to acknowledge that crypto exists, that is category one. So I'm not talking about them. By the way, India used to be one of those until last year. Are countries which have just said this is bad, we won't talk about it, this is banned. So barring those two categories of countries, we have basically seen two types of regulations. The larger countries such as the US, Canada, England, Australia, to some extent Singapore, but Singapore comes in the gray area, have taken the view that they have taken their existing laws and they have read them to include cryptocurrency rather than coming up with cryptocurrency specific regulations. So for instance, in most states of the US, by most I think all barring three, when these crypto exchanges work there, such as Coinbase, they actually have a money transfer license, and money transfer license has been there before crypto was created. Likewise, several European Union crypto exchanges actually have things like e-money licenses. There are, of course, in Malta, Estonia, there are crypto-specific regulations, as in a few other countries. So there is that set of countries, usually the more established, developed countries, who have used existing regulations to include crypto. And I think India is headed the same way. To come up with a virtual financial assets act like Malta did, or how Estonia, Bahamas, Cayman Islands, and a bunch of these people do, that we are noticing in all of these havens and countries which want to attract companies to come there and incorporate. So the island nations, the tax-free havens, etc., are all doing that. Dubai, kind of again like Singapore, is in between those two. So what I'm getting at is the fact that unless the view is that all of this has to be stopped, it is going to have to integrate with everything. There is a specific South Asian country, which I'm not at liberty to say because of confidentiality clauses, which actually had hired a team. I was part of that team to basically come up with a list of all their existing acts, right from income tax to banking, to basically touches everything, to adapt them to allow cryptocurrency to flourish in their country. So that is roughly the way it goes, unless you say, I will create an act, and that act comes just like a SEBI act. It comes and says, while all of the other guys were talking about it, but now this overrides everything. So one unified act, which I think will happen, but I don't see it happening in the next few years, to be honest, right? In India or in the US or in several other countries. Very simply, status of cryptocurrency. Some people take the view that, since there is no regulation, it is illegal. This is highly erroneous. Assuming that most of the listeners today are located in India, probably Indian citizens and residents of India, because obviously these jurisdictional issues come up. So assuming you are an Indian citizen resident in India, I'll tell you what you can do with complete safety and where the gray areas start. Using money from your Indian bank account or payment account, UPI, payment wallet, whatever, as in an Indian RBI licensed account, you transfer Indian rupee to an exchange registered in India, which does KYC, which is address verification, identity verification, etc., bank account verification, and those kind of things. You trade, buy, sell, hopefully make a profit, and then you withdraw the profit to an Indian bank account. If this is all you have done, and obviously then paid tax, depending on if you're relatively high frequency, you count it as business income, otherwise you categorize it as capital gain. Though this bit has not been clarified by the income tax department, it is largely what the industry follows. If this is what you do, at present, there has never been a time in Indian history until today where this was considered wrong. The challenges arises because of this very interesting act in India called FEMA, the Foreign Exchange Management Act. Now, the Foreign Exchange Management Act basically starts governing fundamentally foreign exchange as it is in the name, but also has certain overreaching powers on assets moving globally, right? And a sister act of the Foreign Exchange Management Act is the PMLA, which is the Prevention of Money Laundering Act. So that is why institutions, high net worth individuals are often staying away. Family offices are often staying away from investing in crypto because they are worried that what if this triggers something in FEMA and then we are blamed of having done some sort of money laundering, so that was obviously not the case. This gets triggered fundamentally when you move your digital assets abroad. So you put, let's say, money into WazirX, Coin, DCX, BitBNS, Coin, or any of the others. Now you buy, using INR, you buy something. That something could be Ethereum. Now you transfer this Ethereum to Coinbase, KuCoin, Binance, Gate.io, whatever, any international exchange, and you start playing with things there. Now this act of supposedly moving your assets abroad, because nothing has moved, it's all digital and location-less. Is this a violation of FEMA? What I have heard experts, which I'm not, is that a very strict view could be that yes, you have violated FEMA right here, right? Some others will say, no, you have moved nothing. RBI has repeatedly responded to RTI saying that this is not currency, so there is no foreign exchange implications. So some others say it's not. But this, I would say, or confess, is a gray area which needs to be addressed at the earliest in India. Then, of course, taking a very naive view that tax is not payable, which some people do because, hey, tax is not payable because I have, somehow there is no regulation around it. I think it's very silly because the Income Tax Act does not say that here is a limited list of things on which you have to pay tax. I'll get into more specific questions on regulation as and when they arise, but I just wanted to talk about these fundamental aspects.
If I may, actually, Ajeet, I have a question for you on regulation. Do you have any sense of how the government is going to deal with self-custody versus requiring custody at a centralized institution? Because self-custody obviously means, the crypto is now in your possession and then you can transfer it through all kinds of means out of the country to whatever, and they have no control or visibility on that. So how is that going to play out?
What is very interesting, Abhinav, and I must remind everybody that I'm only talking from the Indian regulation point of view. Different governments may have different views as they will. This question, Abhinav, very interestingly, became important only in December of 2021. Until then, this question of where you're holding crypto actually was not something that came up in the regulatory context. So let me tell you why this question arose in the first place and where we are standing on that. If you look at statements coming from the Reserve Bank of India before the winter session of Parliament started, or in the earlier part of the winter session, everybody in the country, including Reserve Bank of India, would say things like, yeah, we are not thinking of banning, but there would have to be strict controls, regulations, and what have you. Very interestingly, before the winter session of Parliament ended, Reserve Bank of India, in one of its meetings, concluded that while this is good to say, but if we allow cryptocurrency, it will be impossible to regulate and control. As a result, nothing short of a ban would be required, right? Now, this was the turning point where a lot of new elements started coming into the regulatory discussion. One of those was that RBI said, how will you know? You can say all these, how will you know what is going on? Now, the answer to how will you know is if people are holding their assets at a place where the government can see them. So if they're holding it in MetaMask, Ledger, Trezor, or any other self-custody mechanism or service such as BitGo, Fireblocks, Liminal, if they're holding it in the WazirXs, etc. of the world, the government can ask them, tell me, give me a dashboard, give me access. I should be able to read your database whenever I like. They can easily do all of that. So because RBI took a view that crypto is actually unregulatable, they said regulations are great, but upon study, we feel that it cannot be regulated. This issue came up that it should be stored at a place which allows a regulator, institution, or a government to be able to see it. So there was talk that you cannot do self-custody and you cannot hold it in international organizations and exchanges, but you would have to hold it in exchanges in India. Now that, by the way, is a very dangerous term, because if you actually go down to the corporate structuring of these exchanges, none of these exchanges that we regard as Indian exchanges are actually Indian exchanges, right? Which means probably a new set of licensing or recognition be given by SEBI or whoever else. So this came up, and then we were like crying buckets from the rooftop that we said, you know what we want to be able to do? We want to be able to log in using MetaMask. Because you can, when you log in using MetaMask, and any value transfer has to be done, it has to be done from that wallet. You can't log in with this wallet and send money from another wallet, which means the government is specifically saying that only the speculation use case of cryptocurrency is being supported. All other use cases, such as DeFi and minting of NFTs or whatever else, which require you to be holding your own asset, the government is banning all of those, but only supporting speculation. Because speculation you can continue doing on an Indian exchange. And this sounded like the opposite of the government's intent, where they said the speculation is worrisome to us. We want to support the technology and the innovation. And guess what happened as a consequence? The government decided to not table the bill for a second time in Parliament, because we came up with this standoff where on the one hand, we need to address RBI's concerns. On the other hand, we have completely non-overlapping sets. These are the feasible options. These are RBI's concern, and we want this to overlap. That is where we are. The thought of allowing self-custody or rather disallowing self-custody is very new in the Indian regulatory space. I hope that because we all created such a big hue and cry, that it has died down, but it remains to be seen.
That's fantastic. Very insightful, Ajeet. Abhinav, is there anything else that you'd like to ask?
No, I think that's good, unless other people have questions, but that's fine for me.
I think there are some questions, but we'll ask them in the Q&A. But yeah, let's move on to NFTs then. Could you shed some light on NFTs? What are NFTs? What is this new hype? And like, how do you value an NFT? That's something that I've been wondering.
Yeah. So look, NFT is a very, very interesting use case that sort of really became popular and became a craze, I would say, even in the last year, right? But essentially, I think if we really look at what is the core value proposition of an NFT, right? And it's you know, if you remember, we said right at the beginning, one of the key attributes of Web3, of what makes Web3 special, is the ability for users to own part of the web, right? To own digital assets. And so NFT is very much in line with that. NFT basically allows digital asset ownership. And it allows, once you own that asset, you can transfer that asset, you can trade that asset, and so on and so forth. And then if you take that as the core property of NFT, the applications of that can be, you know, basically infinite, right? Anywhere where a digital asset can be used, can be monetized, can be verified in terms of who is the original owner, who's the rightful owner of that. All of that can be done through the NFT sort of system. There are, I think, the kind of things that people started trading a lot, there was a lot of speculation around, was NFTs as a collectible. So simply taking a, you know, digital art, for example, is one use case, right? And so digital art could, and the problem always with value, so digital art, you can argue, is valuable. And a lot of people from, you know, older generation, including my generation, would say, you know, there's no value in a graphic because a graphic can just be copied and pasted very easily. And that was the big problem with digital assets, right? It's you can replicate a digital asset infinitely at almost zero cost, right? And just very difficult to stop that. So I think what NFTs allow you to do is to create an authentication mechanism, right? It allows you to say that a piece of digital data, whatever that might be, let's say in the case of art, it's a piece of digital art, is the original piece of digital art as signed by whoever was the original owner, right? Through that cryptographic signature, you can very easily verify that this is the authentic piece. And if you then think about what is it that, if you think about art and what is it that, how does art accrue value, right? One part of it, an important sort of necessity, though not sufficient condition for valuable art, is that it needs to be authenticatable, right? Someone, if I have a copy of the Mona Lisa on my wall, you know, it's not worth anything because that's in a copy. So unless I can validate that as being the original, that's when value attributes, right? So to be able to attribute value to a digital asset, you needed the ability to be able to show that this was authentic. And I think that's what NFTs do, right? So that's fundamentally the value that NFTs bring to the table. And then the use cases can be so many. So art is just one use case. And, you know, I know there's a question online about how do you, and you mentioned also, how do you value NFTs? But I think the question is not really specific to NFTs. The question is, how do you value, if it's art, then how do you value any piece of art, right? The first thing is I verify that it is the original art signed by the original artist. That's number one. After that, it's very much a social phenomenon, right? That's how art is valued. A large group of people get together and agree that a certain artist is special and has more value than another. And, you know, me personally, I don't necessarily understand how art is valued even in the old traditional space. And so I think the same principles apply to the NFT space. So I personally don't speculate on NFT art, but there are many people who understand that social networks are involved in valuing art and are able to tap into those trends quite successfully, right? But that's, I think, I think what's very important for us to keep in mind is that what is the fundamental property of NFT? What does it fundamentally allow us to do? And I think it fundamentally allows us to establish ownership over digital assets. How do you use it? For me, one of the most important or one of the more interesting current use cases for NFTs in gaming, right? And we've seen the emergence of a lot of these so-called play to earn games, right? And if you looked, and gaming, by the way, even before NFTs came along, gaming is a industry that's bigger than movies and music and everything and sports put together, right? But what was happening in that gaming industry, and this is a classic advantage of Web3 versus Web2, is all the value was being captured by the game developers, right? And the users were basically getting some entertainment value, but that's it, right? So if, for example, if I'm in a very popular game, World of Warcraft or whatever, and I'm building my character, at some point, that character is just an entry on a database of a central organization. They tomorrow decide that it does not exist anymore or whatever, it's gone. All my investment of time and effort is worth zero. Similarly, I think there's a recent case in a different application. There's a recent case where there was a lady on Facebook who had the handle Meta, right? And when Facebook decided to rebrand to Meta, they took away her handle. And now that's Web 2, right? And that's the value proposition of Web 3. That's the value proposition. That's where things like NFTs, etc., come in. That you can establish digital asset ownership, and that's really the core, I think, on NFTs. The important thing that you should focus on when you think about NFTs.
That's awesome. So yeah, we may have some more questions about NFTs in the Q&A. But before we move to the Q&A, are there any recommendations that both of you all have in terms of articles, gurus to follow, pages to follow, or podcasts to subscribe to? Because of course we can't cover everything in a 1 hour 15-minute session on demystifying this space. So both of you all, Abhinav and Ajeet, if you all could maybe share some recommendations that I can share with everyone later, then it would be great.
So, the thing is that if you want to get into the technology, the more rigorous thinking, there's a guy called Andreas Antonopoulos who runs a YouTube channel called Antonop, which is AANTONOP. So you can probably just post it in I'll send you the link on WhatsApp channel. So that guy is really good. I respect him a lot. I have learned a lot from him. If you want relatively more news about what is happening now, or something happened today, how do I interpret it? Which is not deeply academic or theoretical or conceptual stuff, but still fair, reasonable analysis. There's a guy whose name I forget, but he runs a YouTube channel called Coin Bureau. Right. So I've sent you the link of that also. Sharon, maybe you could share that in the chat. So I think these two, the combination of these two should take care of your conceptual understanding as well as your current news requirement. Other than, of course, keep reading what is happening. The only thing I'll guard you against, and I would tell you to not do, because doing it will lower your education, is that non-crypto media, which is business channels, other channels. I personally appear on several of them, I must say. A lot of them, I would say most of them, though not all, they don't get it. As a result, they will want to see it from the lens of the stock market or the banker market or the currency market and reach highly erroneous calculations in those 10-20 minutes of programs that they do. And often I worry that they leave the viewer less intelligent than you started out. So that would be my suggestion.
Right. And Abhinav?
So, there are just an incredible number of really great sources, but like I said, I come to crypto from a macro investing sort of perspective. And so some of the sources that I found quite useful were Real Vision has a crypto channel on YouTube that I think has a wide variety of perspectives on all various crypto topics. And there's a lot of foundational stuff there. So I think, if someone's looking for a diversity of viewpoints and of ideas and so on, you can look at that. From a macro perspective, there is a analyst, Lynn Alden, who I think writes a lot and quite well and very accessibly about the macro case for things like Bitcoin, for example. So I think that's a very good place to start. And then there are a couple of podcasts, I think, Sharon, which I sort of forwarded to you. So if you don't mind, you can sort of put that in the notes. A16Z is the biggest crypto investor in the world. I think they publish a lot of interesting fundamentals sort of views, right, on their website, I would certainly keep a track on that, right? So they talk about everything from how they think about governance, which I think, by the way, is fascinating. So, and at this point, they're talking about just, governance of DAOs, as Ajeet had mentioned before. But I think, it would not be difficult to see how that sort of governance mechanism can extend out to other things and into politics and society in general as the sort of a long future. But so they write some fascinating foundational things there. I think that is something worth keeping track of. And then I personally, when I was starting off from a technical point of view, how do blockchains work, right? And that sort of stuff. There's some very good foundational courses on Coursera that are for free. The way I personally, my first course was a Princeton University course. Again, I've sent you the link to it, but anyone who goes to Coursera will find a whole bunch of them. And this is some very good 101 technicals of blockchain and crypto, right? So I think if someone's interested in that sort of thing, worth digging into it.
I was smiling was that my first course also, actually course-wise, my only course was that same Princeton course on Coursera you talked about. Extraordinarily boring, as in I would just keep falling asleep and then have to listen to the session again, but very informative nonetheless. Very informative nonetheless, but really, as in I wish it was a little more interesting. I took like a year to go through it, where I would like keep falling asleep every time I listen to it. But still, yeah, that was my first course also.
Wow, that's fantastic. So what I'm going to do now is actually share my screen, and so everybody can see all the Slido questions. Just before I do that, if everybody wants to take 2 minutes to maybe post more questions and upvote any other questions so that we can take maybe 2 or 3 questions at a time. What do you guys think?
Yeah. Thanks, Aditi, for sharing that you're from Princeton. So there's a turncoat in this audience, so who's not from LSE, but from Princeton, who's like really happy. She just messaged me all the same. So I must, there's only one thing that I have, that Abhinav can do what he wants, but when somebody asks me, okay, tell me, should I buy this token or name some tokens to buy, I would not do that. I can go so far as to say how I would go about selecting it, or what are the categories, the different small cap, mid cap, micro cap, etc. But I would personally, because that's the number 1 question on the list presently,
yeah,
I would desist from giving a list of tokens that they should invest in, or compare one token or make a price prediction, or I just can't do that. Okay, but otherwise, everything else is Indian.
Right. So yeah, if someone was starting out with a basket, okay, that you just addressed that. Abhinav, is there something you wanted to add to this? The first question.
No, I think, look, like I said, I completely agree with Ajeet. This is definitely not investment advice, right? So I think what I can also highlight is how I think about things in terms of investing in crypto, and what my risk reward sort of thought process is and why I've invested. And obviously, I'm going to say to everybody that it is a highly speculative space. It is highly volatile, and therefore, that comes with a certain amount of risk. So everyone should be aware of that. But yeah, so no recommendations, but certainly happy to talk through how I approached it when I first started, and what the framework was broadly for thinking about investing in crypto assets.
Yeah, could you just expand on that a bit?
Sure. So look, the way I thought about, generally, the way I think about this is it's an extremely early phase in but what I think is a foundational technology, right? So a technology in which I think adoption is going to continue to increase. That's my view, personal opinion. And therefore, there's going to be massive amounts of value that will accrue to the space in general. I think the question is, what will win and what won't win. And that's the part that's very difficult to pin down. And there is the risk in there. When I started off thinking about investing, my broad thought process was as follows. I said, look, what is my risk in this asset class? And I said, let's assume the worst case scenario, my risk is 100%, i.e. any money that I put into this is going to be lost, right? What is my reward? And, I started by evaluating the safest / biggest / longest existing asset or first few assets in the category. And obviously Bitcoin is where you start. I spent a lot of time getting comfortable with the fundamentals or the governing dynamics of why I think all the things we talked about, which is blockchains, etc., why they're important, and specifically on the use case for Bitcoin, which is, in my view, at least the the first level use case is digital gold, right? So once I was sort of comfortable broadly with the idea that I think Bitcoin has the potential to become a long-term store of value sometime in the future, the question was, what's the upside if things go right? And the upside if things go right, very simply, I modeled back of the envelope. I said, look, today gold is a $10 to $13 trillion asset class. Bitcoin is less than, at that time it was less than $500 billion. Can this become, if it's accepted broadly as a as a digital gold use case, can it become 50% of the gold market cap in the future? My sense was it probably could. If that was the case, then we're looking at a 10x upside. So if I look at, and then I approach this as a asymmetric upside scenario, which is my upside is, by the way, all these numbers are completely back of the envelope. So nobody hang their hat on it. This is just my perspective. But if the upside is a large number, like a 10x, for example, and the downside is a 1x, am I comfortable? The next step is how comfortable am I with that? And how much do I allocate from my portfolio, right? So, usually people start with 1 or 2%, right? Because 1 or 2%, if it goes to zero, you don't necessarily miss it. But if it goes 5 to 10x, it's not immaterial, right? And then as you get greater and greater conviction, you start moving up in terms of allocation. And as you do more and more research on alternative use cases, whether you start looking at Ether, you start looking at Solana, you start looking at something like a Luna, which is a stable coin. As you start getting more and more comfort with that, what you can sort of do over time is reduce your allocation to the safe asset in this category, which would, let's say in my case was Bitcoin, and then I started allocating more to some of the other assets as I got more comfortable. So that was broadly my sort of framework on how I allocated to the category.
Right. So when you look at a white paper, which in my understanding is nothing but like a pitch deck, right, for a crypto, as an angel investor, I usually look at a pitch deck with a certain checklist in my mind of what all I need to go through in terms of the team, the USP, the product, what is the problem they're solving. So is this framework that you just spoke about what you would look at for any new crypto that's out there, or is there something else that you would take into consideration?
I mean, I think you should always start with the white paper because that's really the basic. But then there's typically a lot of other sources of information and research on any project, right? And if the earlier it is, the less information there is, the later it is, the more mature of the project, obviously a lot more information. I use Twitter quite actively to follow what I think are credible sort of opinion makers and sources of data, and then follow from there into various other research resources. Look, I think everyone's journey, it has to be a personal journey. But in the end, what I would say is this: it's a highly volatile asset class, even in what is considered the safer part of it, which is Bitcoin, right? Which means when things are going wrong, and they will go wrong, the only thing that protects you from buying at the top and selling at the bottom, which a lot of people do, is a degree of conviction, right? So the more conviction you have, the more comfortable you are with the fundamental premises of why you think a certain asset class will get greater adoption, or a certain protocol will get greater adoption, the more you'll be able to tolerate that. And I'm telling you, it's going to be gut-wrenching sort of volatility in the prices of these assets.
Great. Let's see what else is up there. All right.
Just one, if you don't mind, there is one thing in addition to what Abhinav said that I do. So when I have to select from existing tokens that are already in the market, beginning with the white paper, beginning with the community, beginning with seeing the development, beginning with seeing how much of their intent has translated, which are some of the parts that Abhinav has covered in his own words. I agree with those. However, what I do is within the crypto market, I play on the two extremes. On the one hand, I play on the relatively more stable, the Bitcoin, Ethereum, Polygon, Solana, Cardano kind of top 20 kind of coin. And on the other hand, I play with tokens that have not been issued at all, as in they are just proposed tokens, right? Which means they are going to, there's like the incubator stage of investing. What I do in that situation is a little different than look at the white paper, etc. Because frankly, by the time token will be launched, it will all have changed. So there, my personal decision making amongst the fundamental things like, hey, is this yet another NFT marketplace, and how do I feel about that? So obviously, there is at least a high level thought around the use case, but the bigger driving force tends to be my ability to influence the success of the project. So my ability, for example, to influence the price of Bitcoin is negligible to zero. But my ability to help a team, which is, I believe is a good team, which I believe is up to something good in terms of connecting them, getting them partnerships, getting them initial adoption, helping them grow the community, etc., because they're starting from zero. I believe that I have the ability to do that in some cases. So in those cases, like Sharan, I'm sure in your conversations about angel investing also you must have brought up that if you can add value, and I must tell you that in non-crypto startups, we talk a lot about adding value, but I don't see too much value being added other than strategic brainstorming discussions from angels. There will be, of course, exceptions. But in crypto, the very act of launch management, I mean, when you launch your token on the market, what happens in the first few minutes, hours, and one day? Because that is a big precursor of what's going to happen in the weeks and months following that, though not necessarily years. So all of those kind of things, often the entrepreneurs have not even thought about, leave alone having a skill set. So those are some of the things I bring to the table, helping them fundraise, connecting with influencers. By influencers, I don't mean like social media influencers, but people influential in the crypto world, which would help them develop partnerships. Because ultimately, what brand was to the traditional organization, community is to a Web3 organization, right? So whoever wins the community race, even with a really shitty product or a really Me Too product, I shouldn't say shitty product, but a really Me Too product, I think if they win the community game, they have won the game. So those are things that I have developed some skill set on merely because I recognize their importance. And I come in at a pre-seed kind of stage and choose projects where value can be added.
So almost like the private equity of cryptocurrencies. Sorry, you're on mute, Ajeet.
Yeah, I try to mute immediately after I stop talking. But yeah, I would say that the venture capital or the seed capital of cryptocurrency actually.
Got it. Okay, so someone's asked if someone was starting out with a basket of, okay, that one. I don't know.
That one is kind of done in a very, very unhelpful way. We have addressed it.
It's come back for
I
some
think,
reason. But yeah,
there's
so
a question by Kanika on how decentralized will Web3 remain, which I think is a very important question. Maybe we can talk a little bit about that.
Sure, yeah, let's do that.
Okay, so look, I think this is the battle that I don't know how many people were following, but between the A16Z guys, who are, like I said, the biggest investors in crypto, and they're basically, raising now, I think a 3 billion fund. The last fund was 2 billion. They're investing in almost every single major crypto project globally. And then you have on the other side, Jack Dorsey saying, right now Web3 is owned by these private equity guys or the VC guys, and that's bad for decentralization. So I think this is, what I referred to before as well, right? Their decentralization or extreme decentralization comes with trade-offs. It comes with costs. And while a lot of people in crypto are working very hard to mitigate a lot of those costs, things like layer 2s on top of base chains, etc. In the case of Ether, they're shifting from proof of work to proof of stake. All of these things are happening, right? But the fact is, there is a significant amount of trade-off. So there is always going to be a question about, and decentralization, therefore, is a spectrum. It goes from extreme decentralization at a high cost and sacrifice of bandwidth and so on and so forth, and then it goes to extreme centralization, where, for example, right, Facebook today has 3 billion users, 1 billion active daily users. If someone like Facebook wanted to be on a blockchain, they would break. No blockchain would survive that, right? It's impossible. So if they develop a technology that's totally centralized, it is understandable because they're solving for a different use case, right? So I think this is going to be a fight. This is going to be a fight between the Jack Dorseys of this world who are going to insist on decentralization. And then their responsibility or their push is going to be to develop layer 2 solutions or other engineering solutions that will solve that cost and throughput problem. And then there are going to be guys, like Solana, for example, is a lot less decentralized, and they're quite unapologetic about it, right? They say, look, we are decentralized enough, it's good enough, but we solve for the speed and the cost and the throughput, right? So I don't think there's a right answer to this question. I think we will watch this space quite, closely, and we'll see how this game plays out. Again, my suspicion is multi-chain world, right? And different chains or different ecosystems, or it could even be a ecosystem of multi-chains working together. will optimize for different use cases. And I think that's the reality. And then on top of that, there are a lot of complicated bridge technologies being built saying how do we move crypto digital assets from one chain to another chain and all that stuff. So there's just it's like a whole mess of things going on. And honestly, I don't think there are any right answers right now. So we'll have to just keep an eye on the space and see how things go. But this centralization versus decentralization is going to be a continuous fight in crypto. I think it's going to go on for a long time.
Okay. So I think somebody's asked about a room for investors to dabble in NFTs. Like, is there a room that exists? And because the whole space seems to be rather confusing and inaccessible. It's got 9 votes. So Abhinav, would you want to take that question because you spoke about NFTs?
Again, look, I am not giving any advice on investing or speculating. What I would say is that I personally don't dabble in NFTs in the context of collectibles or art, personally, because I don't feel comfortable with my ability to value them, right? The value for art or collectibles is very social. It's, which social networks are you part of, and the branding, as Ajeet says, and building the right community around that and all that. I don't get that part of it specifically in the context of that. So I stay away from it. There are people who understand and get that very well and might dabble in that. Where I find NFT investing interesting is, like I said, in the context of gaming. But my focus is much more on trying to invest in what I would call picks and shovels. And this is the same concept I would use on the Web 2 side, right? So I know that NFT adoption will probably go up by a lot, right? What I don't know is which NFT will be worth a lot and which won't. But can I bet on a pick and shovel, which is something, or an infrastructure play, like, for example, OpenSea? I should have invested in OpenSea a long time ago. I had an opportunity, I did, right? Will that value go up significantly because of adoption on NFTs, right? So those are bets that I'm more comfortable taking personally than taking bets on specific and individual pieces.
Right. And what about this one question, which I found pretty interesting? I've pinned it. Is it possible to store and send fiat currencies on blockchain networks? Because I feel like this has something to do with stablecoin, right?
Ajeet, do you want to address that?
Yeah. So stablecoin is generally not regarded as a fiat currency, because fiat currency, by definition of the word fiat, is created by the diktat or the fiat of a sovereign nation. You can have pegged cryptocurrencies. One of the most famous ones is USDT, which is also called Tether, which is tethered to the USD. And most of the popular stable coins are tethered to the USD, while there is no real reason for that. Attempts have been made even to create Indian rupee tethers and stuff. But the fact is that fiat currency by itself is not natively digital. A transaction over the blockchain will not be accepted by the issuer of legal tender, which is the Ministry of Finance and Reserve Bank of India, as acceptable tender. They're planning to come up with their own blockchain-based currency, CBDC, which, when that happens, then their cryptocurrency would be effectively doing fiat over the blockchain. Today, that is not happening. Many governments, while we had last count was around 6 months ago, there were 83 governments which were working on their own CBDC. But today, what is happening is all of these, including stablecoins, are not fiat currencies. That is the current state of affairs. I see that changing soon.
And what about Olympus DAO and Wonderland DAO, etc.? Like, can you shed some light on DAOs?
So I'm not going to tell you Olympus DAO or one. Frankly, I don't even know about the second one. Olympus DAO, at least know something about it. But I can tell you about DAOs. If you want to know about DAOs, not about a specific DAO. So basically what is happening is that if you think about a private limited company governed by the Companies Act of India, it creates its governance structure using a board of directors who are the fiduciaries responsible to make sure that some things are going right. And often they are also the ones who, based on their shareholding in a company, may also gain the most from the good performance of the company. Is it really required to have a Companies Act which says this has to be done, this cannot be done? Can't you code some of this into an algorithm, some of this, and the rest of it comes from an incentive mechanism which just prompts everybody to do the best for the DAO in its given context? Which means, just imagine if somehow we had a system, however 1984 like it might sound, where all of us just behaved well because the system only rewarded good behavior. That is what the DAOs are about. Decentralized because ownership is spread to a large number of people. Autonomous because it's driven by an algorithm, not by an external code such as a Companies Act. And organization because they substitute for the same thing as let us say a private limited company did. Interestingly, virtual organizations, as Seychelles calls it, or even the state of Wyoming in the US now recognizes these DAOs, but recognizes them as if I'm not mistaken, LLCs. So all around the world, legislation is starting to recognize virtual organizations. However, since they are mapping it onto existing structures, master partnerships, association of people, etc., actually the essence of a DAO is lost. But what is a DAO? A DAO is a blockchain-driven, consensus-based substitute for traditional corporate structures such as companies.
Wow, that's a bit complicated, but all right. Thanks for simplifying that. We've got some more questions. I'm gonna ask you the ones which are the most popular first. With global tech, have we answered this? With global tech companies racing to build their own metaverse, how likely is it that Web3 will continue to remain decentralized and democratic?
Yeah, I think we talked a little bit about that.
Yeah, we did, right? All right, and if we move to the next one, somebody wants you to comment about Nassim Taleb's quote on Bitcoin, that it isn't a currency or store of value or inflation, or a haven from government tyranny. It is a fragile bubble and is speculative. Any takers on this?
Yeah.
I have something to say on the, no, but you go ahead first, then I'll also give my take on this.
Look, I think, firstly, I think anyone who says that Bitcoin, for example, is already all these things, store of value, so on and so forth, it's not, right? But it is, in my view, it has an aspiration to become a store of value when adoption reaches steady state, right? And while adoption gets to steady, so my perspective is that we're in a very early stage of adoption, and at some point we'll have mass adoption. And when mass adoption happens, that's when you start seeing all these properties come through, which is stability, store of value, etc. Today, it's just an aspiring asset into that category, right? And whether it's successful or fails, remains to be seen. Obviously, from my perspective, it will be successful. But I think much more than that, it is important to note that any monetary asset, and Bitcoin in this case, and if we believe in the sort of digital gold use case, Bitcoin is a monetary asset like gold is a monetary asset, right? A monetary asset's primary value is derived from speculation, in the sense that gold doesn't have value because it's useful. Gold has value because enough people agree that it has a certain value, right? And that's the interesting thing about monetary assets. And that's why there have never been in history that many long-lasting monetary assets. And if you think about the last 5,000 years of economic history, gold is probably the only, long-term surviving monetary asset, right? And so I think Bitcoin can be a digital gold. I think that's the aspiration. I have no guarantees that it can happen. I think it will, but there are no guarantees. But in a very early stage. So what's going to happen is, in the adoption curve, if we go to the logical conclusion, the value of Bitcoin will increase incredibly because we'll start filling the need for that stable monetary asset use case. But in the meantime, secularly, while it will go up, there will be extreme amount of volatility because we are at this sort of very early stage of adoption. So that's my perspective on Bitcoin specifically. And I agree, it is speculative. There is no question, because no one knows what the end game is going to be. But we are all taking a view here, and we have reasons to take our view, and those reasons may not play out. But that's the way it is. That's the way I see it.
Right.
So what I will do is I'll just talk about the fact that whether it is Warren Buffett, Charlie Munger from Berkshire Hathaway, or several other people, including Alan Taleb, people who I have been regarding as my heroes, and strangely enough, despite their current views on people, I still regard as my heroes, and I learn a lot from them. And there are others like Ray Dalio and many others who I really like to listen to and understand. A lot of them have negative views on crypto. So I will just sum up their negative views into two fundamental objections. And then I'll tell you how, despite the fact that I like all of these guys, how I reconcile the difference between their views and mine. So first, their negative view is the fact that there may be no underlying value to this, right? I think Abhinav has addressed that very well. And while what he has said is true of Bitcoin, in some of the other coins, there may actually be very easy to understand underlying value, even in the traditional finance sense of the term. But the second and the more important thing is that they look at all the madness that is going on in the crypto market, the wild speculation, and then suddenly Dogecoin, then suddenly Shiba Inu, and suddenly a coin changing value like 1,000,000 times, not billion%, 1,000,000 times in one day. And then there being just not a one-off, but like, for example, any given day, you can go to a listing site like CoinMarketCap and, sort it by the percentage change over last 24 hours. There will every single day be at least a few coins whose percentage change from yesterday is a 5-digit percentage. And sometimes even 6 and 7, but 5-digit you will find literally every day. And by the way, there'll be a positive 5-digit as well as a negative 5-digit every day, right? So basically the negative 5-digit has gone down to 0. But what I'm saying is that the market, the way it is evolving, at least for people who understand markets and traditional markets, is very disturbing. It is very disturbing that, Shiba Inu, for example, is one of the top 10 coins, right? And it's very difficult. Like if you ask me, that, hey, if you have been talking so rationally and logically, explain to me why Shiba Inu is a top 10 coin and is worth so many hundreds of billions of dollars or whatever the amount is, I am at loss. Somebody might be able to. I agree, but I think that what they are getting wrong, and this is like, gosh, I'm saying that Taleb and Buffett and all are getting wrong, and somehow I've got it right. But I think what they are getting wrong is that they have not given it enough time. And had they gone back to, let us say, the early, like the 93, 94, 95 internet, and what all of us would do at the internet, other than email, it was a complete waste of time, and internet should actually have been written away. Right. So whenever some new paradigm starts, there's all this chaos, there's all this nonsense which has to be there. So basically the question has to be that, does it have the power to do something extraordinary? There the answer is yes, which is why you will hear several uneducated statements such as, oh, blockchain is good, but crypto is bad, as if those two could be separated. So I think that probably looking at the current state of affairs, there is a lot to be desired, and there is a lot that is wrong with the crypto ecosystem. But that is not the view I am taking. I am taking the view of where it is going. And I see, like I began right in the beginning, a golden future.
Awesome. So there's actually a question to Abhinav. Someone's asked that, being someone with a traditional finance background, how do you determine an underlying value of the asset in terms of cryptocurrency here?
Yeah, that's a good question. I mean, obviously, it depends on what the asset is, right? There are some, for example, some crypto assets that have what would be very acceptable in the traditional space as valuation indicators, right? So positive cash flows, etc. So in those kind of scenarios, I think you can actually value them like you would value a more traditional asset. There are others that are a lot more speculative, and therefore, there are different ways that you sort of come up with value. I would say in the more speculative category, like for example, I just gave you a very rough back of the envelope sort of sense of how I thought about the potential upside in, let's say, something like Bitcoin, right? Which is, again, like I think that's the very simple and basic use case. But when you think about things like Ether and then Solana, etc., I agree. I mean, I don't think so. If you start to try to figure out fundamental value or intrinsic value, I think you're going to struggle, because I think it's difficult to establish fundamental and intrinsic value in a lot of these scenarios. That's my opinion. And I would also agree that a lot of these scenarios are more about relative value, right? So people are saying, look, this is where it is today, right? Is adoption, and I think you need to think about adoption. Is adoption and usage going to increase by a significant amount in X number of years? And try to think long term, because short term is impossible to predict. But in 5 years or in 10 years, is adoption going to go up significantly on this protocol, on this platform? And is there some estimate of 10x, 100x? Is that possible? If the answer is yes, your view is true for whatever reason, then that it's probably going to be worth a lot more than it is today, right? But I would be surprised if anyone can come up with a mathematical and specific number on what fundamental valuation is for a lot of these things. I think a lot of it is relative value driven.
I see. So there's a question which has our top question at the moment, which is what types of Web3 models do you see taking off in India in the next 5 years in terms of creator-driven ecosystems and communities? I don't know who wants to take this question. So maybe Ajeet.
Maybe Ajeet can take a first crack.
Yeah.
Yeah. So the thing is that currently the creator ecosystem, forgive me, I've been sitting for very long, so now I'm pacing up and down my room. So I've turned off my camera. If you want to see my shaking ceiling, I could turn it on, but that's the reason. Yeah, because I've been sitting for too long. I don't like to sit.
Yeah.
But coming back, the current state, I know the question is about what will be the future, but the current state has become people creating images and monetizing them by calling them, NFTs. And as the first set of punk images now are no longer considered purchasable. So the recent set that I saw was something about Shiva. So there's a Shiva line. So probably trying to correct some sort of emotional attachment. I think that this is on its way out, especially because secondary markets won't develop and emerge. What I think might last is that a combination of three things. Number one, of course, is some form of creation. A visual art is definitely valuable. Then there could be other forms. It could be even audio. It could probably, as in very well, be short video. Second, these creations having certain affiliation value. Sachin Tendulkar or somebody saying this is my line. It is just like, a lot of cricketers and movie stars and sports people tend to have their own perfume line. And I've never understood why I would want to have a perfume line by a particular one of these guys, but it creates a sense of affiliation. So a certain sense of affiliation, which also leads to the belief that there would be a secondary market. So that is the second part. So creation coming more from a limited number of special video creations with affiliation. And third, where people create or make an attempt to create some utility of these. Now, utility is very difficult. The most common utility presently, which I think is workable, is using them in games, right? And people do play games. Gaming is one of the largest industries, and people outside the gaming industry don't even know how big a gaming industry is. And if your NFTs play a role, especially, and forgive me for giving you such a jargon-driven answer, but I'm going to throw one more of them in an interoperable, either an interoperable metaverse, which is what the future of metaverse is, or a very widely prevalent metaverse, such as Facebook's metaverse, if and when it launches. I should say when it launches. I think those NFTs, those created pieces represented as NFTs on the blockchain with affiliation and utility, at the very least gaming utility, is what the near-term future, next 1 to 3 years of the creator economy in India is.
All right. Is there anything that you'd like to add to that, Abhinav?
No, I'm most excited about the gaming applications personally, but yeah, that's what I would say.
I think we are already at 1.5 hours, but do you think we have time for one last question? Because this question came in before our event even began, when we were asking the audience to send in questions that you all could answer. It's basically what DeFi is. Like we've been asking, it's been spoken about. You all have been mentioning DeFi,
Sure.
But if you all can break that down.
So I think DeFi or decentralized finance, very simply, I think what it is disintermediated financial services, right? So everything that you do in the non-crypto world in financial services, whether it is lending, transfers of value, and all the way to options and derivatives and whatever, all of that you can do on blockchain by disintermediating agents and middlemen and so on. And you can do it through smart contracts, which are programmatic and software driven, as opposed to requiring some sort of a human intervention on making a judgment or call. I think that basically is what DeFi is. Ajeet, I don't know if you agree or if you want to add or subtract something from that.
No, I can't subtract. And I think you have done a very good description of the way DeFi stands at present. What I would like to add is get a little, go into the realm of imagination and creativity. Because what I have seen is when in the late 80s, when I was a student of computer engineering, and the microcomputer started becoming prevalent, frankly, the first two applications of the microcomputer, one were bookkeeping, which is accounting, and second was to play games. And frankly, the games also were either car driving or flight simulator, going way back to 1987 and stuff like that. But over time, as the channel shift, which means taking analog processes and digitizing them, we did a lot of that. Then we started moving to the second era, which is where touch screens, mobile devices, etc. came in, where we started doing things on computers. And what I'm looking at right now is a computer by whatever name, actually, which could not have been imagined in a pre-computer era. DeFi today has not reached that stage. In DeFi, we are taking traditional financial applications, such as the ones that Abhinav has given an example of. There could also be insurance and a bunch of other things. And we are trying to disintermediate them. But I think that once enough velocity is created, we could start then seeing applications in decentralized finance, which could not have been imagined in a centralized finance. And it would be only limited by one's creativity.
Understood. So I guess just with that, I'd like to thank both you, Ajeet, and Abhinav for all your time and giving us such a fantastic insight into cryptocurrencies in such little time. And it's been a very, very great learning experience. I'd like to thank the audience for attending this event and making it a success. And I'd also like to thank my committee members, Amrita, Ankit, and Sonia, for all their help and support in organizing this event. So we'll be posting some links in the chat box now to some of our social media handles. So if you don't mind, Sonia or Ankit or Amrita, could you all please post those links, because do stay tuned for more events like this by following us on Instagram and Twitter, and by subscribing to our YouTube channel, where we will be uploading this video and all the recommendations that the speakers gave for the resources. So do keep a lookout and follow us, subscribe to our YouTube channel, and with that, have a great evening and stay safe. Thanks, everyone.
Thank you. Bye-bye.
Bye.
Thanks. Bye-bye. Thank you. Bye-bye.